Okay, so I'm gonna go ahead and give you a review for the first exam. Um, this is for Accounting 2022, Managerial Accounting, Introduction to Managerial Accounting. Um, you're gonna have an overall review posted on Web Campus. So I suggest that you go to Web Campus and you print out the overall review. In this video, I'm just gonna go over some problems. Some problems that will be very, very similar to what's on the test. But a more comprehensive review of what will be on the test is in another review with bullet points, and you'll see that on Web Campus under the folder Exam 1 Review. Okay? So in front of us we have something that I prepared, which is I call it the cost classification chart. You're going to have to learn this. It's very important. There's a lot of questions that are related to this chart. In managerial accounting, in the first chapters, we're going to learn how a manufacturing company allocates costs to its products. A manufacturing company is very different from a merchandising company or service company because it creates a product, right? So how does it cost that product? What cost does it include in the product as part of product cost? And what cost it may expense immediately or not include. As you can see in this chart, first I have it broken down into product costs and period costs. So product costs are all the costs that are going to be included in a manufacturing company's product. Okay, so this would include direct materials, direct labor. Okay, it has to be direct labor. Those are direct labor are the individuals that work directly with the product. For example, if you're manufacturing a guitar, well, that's the person that assembles the guitar, that puts the strings, and so forth and so on. Now, you could also have indirect labor that would fall over here in this category, factory overhead. Those would be individuals like the factory supervisors or the janitors. I think I have it right here somewhere. Wages of janitorial and production supervisors. Okay, so those also go into the product, but they're not considered direct labor. They're considered part of factory overhead. Okay, then you have other type of wages that do not get included in product costs. Like for example, the CEO. CEO probably never, very rarely steps foot in the factory, right? So it's not really a product cost. It's an administrative cost. That would go over here on the period cost. One of the biggest difference between product cost and period cost is that a period cost is expense immediately when it occurs. So if the CEO is paid a $5,000 salary, we recognize it as salary expense in the income statement in that same period. Supervisor, on the other hand, for a factory may be paid a $2,000 a week salary. We will take that $2,000 and we will allocate it to the product cost. And that product cost will move into the inventory category, right? So all the costs are accumulated in the product. When the product is sold, it finally becomes expense as part of cost of goods sold, okay? So this is the cost classification chart learning. The three main categories that compose product costs are direct materials, direct labor, and factory overhead. Direct materials and direct labor are considered prime costs, factory overhead, and direct labor. Direct labor is considered both a prime cost and a conversion cost. So direct labor and factory overhead are considered conversion costs. In other words, they're used to convert the raw materials into the final product, right? So if I ask you what is conversion cost, like I'm going to show you in the next example, all you do is you add direct labor and factory overhead, and that's your answer for conversion cost. Here you have various examples. One thing that's interesting is, and it's a bit unique, is sometimes when the material isn't that isn't such a major part of the product, it can be classified into factory overhead. Like for example, in the book, they took strings and bridges. This is for guitar, and they classified them as factory overhead, even though they are direct materials. That's a little bit subjective, so if that were to happen, I would to let you know. But so there's two qualifications for uh, for a material to be considered direct material. It must be an integral part of the finished product and a significant portion of the product. So if it's not a significant portion, such as glue or something like that, it'll simply be lumped into factory overhead, okay? So learn this very well because it'll help you answer various questions. Let's do the first problem here. Let's see if I can click here. Okay. First problem says, compute conversion costs given the following data: direct materials, direct labor, factory overhead, and selling expenses, right? So as I told you before, just about a couple minutes ago, conversion cost is nothing more than direct labor and factory overhead. So we would add these two, 146,200 and 172,300, and that will give us our answer here, which is 318,500, and that's conversion cost, right? This is not a conversion cost. This is a prime cost, direct materials. Selling expense is not a product cost at all. It's a period cost, right? Let's go back to this tab. See, selling expense would fall over here under period cost. Okay? You have one of these in Web Campus, so print it out and learn it well, because it will help you answer various questions in the test. Let's take a look at another question on the test. Okay. It says the XYZ company reports the following information. Sales is this much, direct materials used is this much, depreciation on factory equipment is this much, and they give you a list of things, and then they want you to determine what are the product costs, right? Well, sales isn't a cost at all. That's a revenue. So we'll go ahead and we'll eliminate that one immediately. That's not. Direct materials used is a product cost, right? If you want, you could put this on pause and go back and print this chart out, because this will give you the answers to all these questions. As you can see, direct materials is indeed a product cost. So we would include that one as part of a product cost. Depreciation on factory equipment. Okay, so this one could be a little bit tricky. Depreciation, if it's on factory equipment, it is absolutely a product cost. It is a part of factory overhead. If it is on some sort of equipment or machinery that's in the administrative offices, you know, where the CEO, CFO works, not part of the factory, then it is not a product cost, okay? So it's important that the line item specify factory equipment. So since this says factory equipment, it is indeed a product cost. So we would include it as part of product cost. Okay, let me highlight the product cost here. This is a product cost. Let me just put it. This is a product cost. This is a product cost. Indirect labor. Indirect labor is also part of a product cost. It says labor. So indirect labor would be individuals such as the supervisor, that's of the factory, has to be of the factory. That would be an indirect labor. He doesn't touch and he doesn't work directly with the product, but his work is strongly related to the production of that product because he is the supervisor or she is the supervisor of the factory, right? Also, the janitor of the factory works in the factory. That's indirect labor, part of factory overhead. Direct labor is clearly part of the product cost. Direct labor is somebody that could be on the assembly line, for example. They actually touch the product and put it together. Factory rent, again, important. It says factory rent. If it said administrative building rent, the answer would be no. But because it's a factory rent, the answer is yes. This is a product cost. Factory utilities, same thing. The utilities were for the administrative offices in downtown or whatever, wherever it is, then it's not a product cost. But because we're talking about utilities for the factory, it is indeed a product cost. Okay? Sales, salaries, expenses. we know that that is a period cost if we look at our charts, so that's not going to be included. Office salaries expenses is also part of other period costs. Indirect materials, those would probably be things like glue and so forth and so on. So we would go ahead and include that as part of product costs. So all these are product costs. And so our total product cost would be the addition of everything that's in yellow, and that the answer would be $32,025 in this example. You're going to have something very similar in the test with different numbers. So what are the period costs? Well, the period cost is very easy. We already determined that these two are period costs, right? Go back to your chart. Look at the period costs. They're related to selling and administrative. Understand what they compose: selling, marketing, selling, commissions, administrative, office salaries, office supplies, depreciation and expense, and things like that. Okay? So these two would be period costs. If I ask you what the period costs are, you add these two up, and the answer is $23,650. What's sales? Well, sales is not a cost at all. It's a revenue. So that's not even a cost. So don't even bother with that. Okay, let's move on to the next exercise. Okay, well, this one is interesting. In this one, they want us to calculate the cost of goods manufactured. We want to calculate how much goods was manufactured. And when we talk about cost of goods manufactured, we're talking about finished goods. Okay, doesn't include goods that are partially manufactured. Those end in work in process, okay? So they give us this information here. And we need to determine what's the cost of goods manufactured. Well, the first thing we want to do is we want to understand how much did we incur in cost in this period. Let's say this is the month of January. So what do we use? What do we use to in total cost? We use these three, right? So step one, calculate how much manufacturing cost was incurred during the period. You're going to add materials, labor, and factory overhead. If you add those three together, you're going to get $122,000. So I incurred $122,000 this period, right? My total manufacturing cost is going to include the cost that I incurred this period plus what I transferred over from the prior period, right? What did I transfer over from the prior period? Well, I transferred over my work in process beginning, $16,000. So my total manufacturing cost is the cost that I incurred this period plus what I already had from prior periods. That means that I had $138,000 in total manufacturing costs, right? Now, how much of that was completed? How much of that went into finished goods? Well, that's easy to know. Why? Because I have an ending work in process. This ending work in process here tells me that this amount of cost was not finished. So if I started with $16,000 from the prior period and I added $122,000 in this period, I had a total of $138,000 in costs. But of that $138,000, I did not finish $22,000 of it. So I must have finished. You take 138 and you subtract 22. I must have finished 116,000. So 116,000 is my total, is the cost of goods manufactured. Or more specifically, it should say cost of finished goods manufactured, right? You finish 116,000 and you have 22,000 that's in process for a total of 138,000, which we already calculated here, right? We got that 138 by adding what we incurred in the current period plus what we brought over from the prior period. Okay? So this is how you calculate cost of goods manufactured. The cost of goods manufactured, finished goods. The book will always say cost of goods manufactured, but I like to say finished goods, right? Because that's the key there. So we manufactured 116,000 in finished goods. So how much did I sell? Well, for that, we're going to need additional information. If I started with 26,000 and I manufactured 116,000, what's the total that I had to sell for that period? Well, we just add them up. 116 and 126 equals 142. So cost of goods manufactured plus finished goods, beginning finished goods, is going to give me the total cost of goods available for sale. But that doesn't mean that I sold it all, right? I have ending inventory. I have ending finished goods. So I did not sell 16,000. So of my 142,000, if I subtract the 16,000 that I didn't sell, I come up with 126,000. That gives me the cost of goods sold. Cost of goods available for sale, which we calculated here, minus, and I did this wrong here, I should put cost of goods available for sale minus ending, finished goods ending, right? Finished goods ending, period, right? Because we did not sell that. Okay? And in this case, to determine the goods available for sale, it's cost of goods manufactured plus what you already had at the beginning of the period, which is 26. Okay? So there will be two questions. This will cover two questions on the test. And so learn this. If you have any questions, just ask me in class or send me an email. Let's go on to the next one. Okay. This one has to do with the allocation of factory overhead. So what occurs with factory overhead is one of the product costs. Sorry, factory overhead is one of the product costs. You see, factory overhead. The problem with factory overhead is that you cannot apply it as it occurs, because sometimes you have some factory overhead that occurs very late in the year, and you have no idea how much it's going to be, or you have an idea, but you don't know exactly how much it's going to be, right? Let's say, for example, the insurance on the factory insurance. Let's say, for example, they charge us at November, but we want to allocate some of that cost to some products that we are producing in the month of January at the beginning of the year. So we can't wait till we actually receive all the bills related to factory overhead to start allocating it, because some of those bills come late in the year. So we have to do estimates, right? So companies do estimates, and they do what they call a predetermined overhead rate. So they're going to do an estimate, and somebody's going to say, well, I think we're going to spend $20,000 in I don't know, factory insurance, and $15,000 in total. It's going to be our total wages for the year, as far as supervisory wages and janitorial expenses and so forth and so on. And so you're going to come up with a predetermined overhead rate based on a certain allocating activity. And typically it's going to be hours. So in this example is machine hours. So it says the Tomlin Company forecasts that the total overhead for the current year will be $15 million with 200,000 total machine hours. So they say we're going to have all our factory overhead in total is going to be 15 million for the year, and we're going to use our machine for 200,000 hours. Therefore, if I take my 15 million and I divide it by 200,000 hours, every time a product or one of my product takes an hour or two, I'm going to charge it $75 in factory overhead. So that's going to be my predetermined factory overhead rate. So if I produce a product, let's say I produce a product and it took me 10 hours to complete that product, how much do I apply factory overhead to that product? I will apply $750 to that product, right? 75 times 10 hours. So you go ahead and you book your factory overhead. Notice this is the entry here. And this entry pertains to the applied, the estimated amount, right? Because you're going to do that first, okay? So you estimated 750, so you're going to allocate 750 to that product with a credit, and you will debit work in process because now you have pushed that cost over to the whatever you're manufacturing that's in process, okay? So let's say at the end of the year or at the end of the period, you come and you calculate, you start paying your bills, and these are the actual factory overhead. So you go ahead and wages payable was 500, accounts payable was 250. In this case, we got an exact number, which was perfect, right? So we got an exact number, and okay, so I had to put this on pause for a second. I had somebody visiting me, so can't quite remember where I was, but I think I was explaining. And let me just do this so that we can see this a little better. So as I was explaining about factory overhead, in a factory overhead, first we apply an estimate. So this is the applied entry. Okay? You do the applied entry, and then once the actuals come in, you do an actual entry. This is based on actual overhead. Okay? So you do both of them. You do both entries, but one is based on an estimate and the other one is based on actual. Notice how you do, when you do the estimate, it goes into work in process. So you're already putting it into the product, right? Because work in process is product that's partially done. That's all that is. It's inventory that's partially done. And then it goes from here to finished goods. So you do this entry. Once the actual comes through, you close your factory overhead. It'll be clear. And you're simply offsetting it with whatever you have to, whatever that overhead applies to. In this case, in this example, it's wages payable and accounts payable, okay? So I'll show you more than I have to. The question here is the predetermined overhead rate based on machine hours is, the answer to that would be $75 an hour, okay? Because we estimated, remember it says predetermined, so we estimated 15,000 total cost and 200,000 total hours. So we're estimating that on a machine hour basis, we will be incurring $75 per hour in factory overhead. And that's what we're going to use to apply initially. Okay? Let's do another example here. This one is also related to overhead rates. It says the Tomlin Company forecasts that total overhead for the year will be 15 million, with 300,000 total machine hours. Year to date, the actual overhead is 16 million and the actual machine hours is 330,000 hours. If the Thomas Company uses a predetermined overhead rate based on machine hours for applying overhead, as this is the point in time of the year, the overhead is, as of this point in time of the year, the overhead is, I think I'm missing something here. Okay, so they want to know if the overhead rate is over applied or under applied, right? In this example. Yeah. So they want to know how is the overhead as it relates to actual. So the first thing we're going to do is we're going to calculate the predetermined overhead rate. It says that they estimated that they will have overhead of 15 million and 300,000 hours. 15 million divided by 300,000 hours means that you are going to allocate you're going to charge overhead at $50 per machine hours, right? So there was 330,000 actual hours, as you can see here. So how much did we apply in overhead based on our estimate? Well, if we charge $50 using a predetermined overhead rate of $50 and we had 330,000 hours, we applied $16,500,000 in factory overhead, right? 330 was charged at $50 each hour. Okay, so what would that entry be? We would put the 16.5 million in factory overhead over here, and we would offset that with work in process, right? Now it turns out that we got our actual overhead was 16 million, right? So what's that entry? Well, you would recognize the 60 million factory overhead with a debit over here. And then these are the different things that cause that overhead. Factory wages payable, factory insurance, whatever, depreciation expense on a machine, whatever, accumulated depreciation, sorry, it's not expensed yet, on a machine over here. But this is the entry for actual, so it would be put on the debit side. So how much did we under apply or did we over apply? Well, we applied 16.5 million based on our estimates, and our actual was 16 million. So we over applied our overhead by $500,000. Okay, so overhead was over applied by $500,000. How do we fix that at the end of the year? We simply close it to the cost of goods sold account. This would be the entry. So I would put a $500,000 over here in factory overhead to close that to zero. And then I would recognize it as an expense here as cost of goods sold, right? 500,000. So if I ask you, where do you close at the end of the fiscal year any balance in factory overhead? The answer is to cost of goods sold. If it is relatively small. If it's big, then something else is done. I'll explain that later in class, but for the most part, it's going to be closed to cost of goods sold. Okay, and that's a closing entry. And that would be the closing entry there. Let's see what else. 500,000. Sorry, I'm missing a few. Okay, so those are some of the major problems that are going to be in the exam. Like I said, I'll tell you much more in class. We'll go over a lot more in class. But if you study this video and then you understand everything in this video and what I'm trying to convey in it, you should cover at close to 50% of the test, particularly if you study this chart very well. Okay, and then we need to cover other areas. Something else that I had to say is there is another video on that does a problem, and the problem is problem 17-2A. Please watch that video because there's going to be a lot of questions on the entries how to make entries related to product costs as they go from raw materials to work in process to finished goods, and then finally to cost of goods sold. So the flow of the product is first you buy the raw materials, right? So it goes from materials, and then after materials you start creating the product, right? So you take the materials and you take the labor and you take the factory overhead and you start converting it into a finished product. But before it's finished, you put it in an account called work in process, right? That's what we saw over here. We're putting some of it into work in process. Once the product is finished, you move it over to finished goods. Okay, these two are part of the inventory, or actually these three are all part of the inventory account. Materials, work in process, and finished goods. They just happen to be in different stages, right? This is the raw stage, this is the middle stage, and this is the final stage. But all three are part of inventory. If you look over here, you see in the balance sheet, materials, work in process, and finished goods. And then finally, when you sell the finished goods, you finally recognize it as an expense. Cost of goods sold. And that's the flow of the product cost. And it finally ends up as an expense, cost of goods sold. Now there's entries related to this. We saw a couple here, some of these entries. There's more that you need to learn, which I'm sure we will say in class, but you will also get a good idea of those entries if you look at the video, a second video that I have on Web Campus, which is related to a problem in the book. It's problem 17-2A. Okay? Thank you, and I hope this helped.